Hello there. In this session, we want to look at risk-based auditing. Um, so what is audit? Auditing is a type of assurance function in which a qualified, competent, and independent professional examines a subject matter, gathers sufficient appropriate evidence, and provides a report based on the terms of the engagement to the users. All right. So when we're talking about auditing, we have a person that is qualified, trained, and chartered or certified. Okay, competent, independent, professional, looking at a subject matter, perhaps a financial statement, perhaps an application, a network, infrastructure. Then you gather sufficient appropriate evidence. Then you write an opinion based on the evidence gathered. That is basically what auditing is all about. Now, uh, risk-based auditing has evolved over the year. Uh, because it essentially focuses on identifying and prioritizing areas of highest risk in an audit engagement. So the Pareto rule, 80-20 rules, all right, so you have to focus on the major. And so you need to be able to understand the auditing environment so that you know the processes that are most critical, the applications that are most critical, the technology that is most critical, all right, in that organization, so that your audit is going to be focused on those critical applications and subject matter. All right, so concept of risk. Risk is a likely occurrence that can inhibit the achievement of business objectives. So any occurrence that can work against the achievement of business objective is what we call a risk. And elements of risk or concept of risk, we have what is called vulnerability. Without vulnerability, there's no risk. Okay. So the vulnerability is a weakness within the organization that can be exploited by a threat. For example, weak passwords, okay, transmission that is not encrypted, right? Employees that are not trained, so they can fall victim of social engineering attacks. Okay, new technology. So because of that, there will be high error rates because staff are still learning. So threats will exploit vulnerability. So threats are malicious and non-malicious agents that can exploit existing vulnerabilities. For example, your employees are not well trained or they are not informed, it can be a source of a danger to the organization. Fire, of course, pandemic, we have coronavirus, all right, hackers, flood, viruses. So we have case studies all over the world where all these threats have caused a calamity of organizations. Okay, impact is the loss on crystallization of risk. The impact could be loss of human life. Okay, it could be um, business disruption, could be compliance challenges whereby you have to pay fines or penalty. Okay, so and so on and so forth. So you need to determine the impact. The impact will determine the controls you are going to put in place, and of course the response, general response of the management to that particular risk. So we need to have controls which are safeguards which will be implemented in response to identify risks. Okay, then the risk management process. Now, how do you perform risk management in an organization? First and foremost, know the business objectives. What are the business objectives? Everything that we're going to do, all right, must be in alignment with the business objective of the organization. That is very, very important in risk management, because the essence of risk management is to keep the organization secure in order to achieve the business objective. So we need to know what those business objectives are. Then you need to take inventory of all assets. All right. Well, like I used to say in my training classes, what you don't know exists, you cannot protect it. So you need to keep your your assets. All right. You need to keep them in sight. So take inventory of all the assets. All right. Then after taking inventory of the assets, you can now start doing risk assessment. Okay, what are the risks? Okay, that those assets are vulnerable to. So risk assessment is a compound word. All right, risk identification, risk analysis, risk evaluation. In many textbooks on risk management, I've seen where they are mixing, interchanging risk assessment and risk analysis. That is not technically correct. Okay, uh, risk assessment is a compound word. Risk identification, identify the risk. Risk analysis, analyze the risk. Okay, in terms of what is going to be the impact on the organization. So you gather knowledge, you gather information. So quantitative risk analysis, all right, describe the risk in terms of dollar or naira um, or yen. So financially, you can quantify the risk, or qualitatively, you can say the risk is high, the risk is low, the risk is medium. So at least we know what we are dealing with. Okay, then risk evaluation. Based on our risk appetite, we'll now be able to determine how we are going to respond to that risk, whether that risk is, acceptable, or a risk that we need to do something about. So risk evaluation, we already have our criteria defined internally, which determines, risk that is acceptable and risk that is not acceptable. So that is what we do in a risk evaluation. Since in risk analysis we now understand the risk, we can now, during risk evaluation, we can now determine, all right, the compare that risk with a standard, with an internal criteria, to now know how we are going to respond to that risk. So of course, once we do risk evaluation, we now look at the options available. Do we avoid the risk? We have done risk treatment in another video. So risk avoidance means you kill the process that is generating the risk. Risk acceptance means you decide not to do anything about the risk because the impact is minimal. Okay, risk mitigation means you apply controls to deal with the risk. Risk transfer means that you take insurance. Okay, you transfer the risk to an insurance organization. Okay, so risk-based auditing implementation, how do you do that? It is all about your knowledge of the audit environment. So if you don't understand the audit environment, forget it. There's nothing like risk-based auditing for you. So it is your knowledge of the business, of the business environment, that will help you to be able to come up with areas of highest risk in that audit. Okay, so you need to know the business objectives of the organization. You need to know the control universe. What is the kind of control? What are the kind of controls they have in place in that organization? All right. You need to know the products, the services they are rendering in the organization. You need to understand the business process end to end. All right. You need to know the enterprise architecture. Okay, what kind of services, what kind of infrastructure, all right, what kind of technology, what kind of OS, all right, what kind of do they have middleware, all right. Also, all this, you need to know the enterprise architecture, the business processes, the supporting technologies. So you need to have an understanding of that. Then culture and ethical disposition in the organization. You need to understand that also, because that is also a source of risk. They need to understand their competition. What is their competition doing? Okay. So to get all this knowledge, well, how could you get all this knowledge? Interview. So interview management and key personnel, review industry publications, okay? Review past audit reports. So what has happened before can give you an indication of what is happening or what will happen in the future. Visit key sites and branches of the organization. Review industry regulatory environment, because that is also a source of risk. So you need to know what is happening in the industry, the regulations that is guiding that particular industry. Then perform inherent risk assessment. What are the risks that are second nature to that particular business or to that particular audit environment? I've talked about audit risk in another video. Okay, so inherent risks are risks that they are due to the nature of that particular entity. Okay, banking, there will always be a risk of fraud. Okay, oil and gas, there will always be a risk of accidents. Okay, so those risks are there. So as an auditor, if I'm going to do risk-based auditing, I must have a good understanding of the inherent risk in the audit area. So basically, these are steps or procedures you can take when you want to perform a risk-based auditing. So, in conclusion, as I've said, risk-based auditing is basically ensure that we maximize the use of our resources when we are performing an audit, such that we focus on the areas of highest risk in the course of the audit.